Welcome back to another episode of The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. Today I thought we'd look at the trading giant Glencore. It's nominally a Swiss company, but really the headquarters are in London, and it's a global giant. It trades everything. It trades wheat, oil, zinc, copper, all the commodities around the world. It owns commodity mines, it owns copper mines, it owns zinc mines, and it's been in the news lately because its stock has been one of the most volatile stocks on the London Stock Exchange. Since I've been typing these notes just to get ready for today's program, it was at 123p per share, and now it's come up to about 130p a share. So it's a very volatile stock. When it went public, you can see way over here, 2011, 2010, about £5 a share, 500p a share, traded down to 67p in the crisis last 10 days, 2 weeks ago, and has rallied from a low of about 70p back up to 130. So very volatile, a stock that if you own it, you're thinking, when is this roller coaster ever going to end? But if you don't own it, you think, is this an opportunity for me to get in on a situation that maybe there's money to be made. Maybe it's a £3 stock and you'll be getting it at 130. Let's take a look at some of the fundamentals. The value, the book equity of Glencore is about 50 billion pounds. As I said, a big company. The market cap, however, is only 20. So the market discounts the equity by almost 1/2, which tells you something. Market's nervous. And why are they nervous? They've taken a lot of short-term and long-term loans to finance not just their trading positions, but their acquisitions. Latin America, Asia, Australia, wherever it is that they happen to have bought into some mines. We're global commodities. We know about oil. That's going nowhere. Coal is worse than nowhere. Natural gas, yes, there's an abundance of fracking in the United States, and that's not their business. But in many of the core commodities in which Glencore is involved, they're struggling. Prices that are at historic lows. There's no forecast for commodities to come back anytime soon. So now the question is, at 130p, do you want to take that money that you earn hard every day and invest it in Glencore? I would be cautious on Glencore. I think it's a well-run company at the operational level, but it's a commodity company, and it's a leveraged commodity company. And what it's going to take for this company to do well, it's going to take to keep and maintain and increase even the confidence that its mainline banks have. Because without bank lines, without trading lines, without working capital, Glencore doesn't have the leverage that it has. It just has assets, and they're underperforming assets, and it has probably more losses than gains. My advice on Glencore, stay on the sidelines. I know it could be tempting. It's nice to think that you can get a dollar for 50 cents, but you don't want that dollar to be worth a quarter. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.